My good morning. For the record, it is January 6th, 2022. Welcome to the new year, everyone, and glad everyone is here for our regular business development advisor training. And to kick off the new year, we actually have a carrier that we have not had on yet all last year. So shame on me, Ronnie, but it is good to have you on and kicking off the new year. So Ronnie Russell is on. He is our American National rep. I'm going to pass it off to him in a couple minutes, but just as usual housekeeping, since it's been a little bit, this is a open forum meeting. Ronnie, of course, will run through information, but don't hold your questions till the end. If you want clarification on anything that Ronnie is going through, just interrupt him and ask the question. This is always a smaller group of people, so that you can all understand the value proposition of American National. And as per usual, our focus by the end of our time with Ronnie is to get 2 to 3 value propositions of why agents should have American National within their portfolio. And there's going to be a lot more that Ronnie goes over than just 2 or 3 of them. But if you guys can grab hold of a couple of them that you can talk to with agents and be able to pivot to different conversations, that's what this time is for. This is for those that are on the recording. It is glad to have you on here. And if you have any questions, Ronnie's information is in our important contacts document. So you can feel free to touch base with them directly. If anything that you see here catches your eye, or you want to talk about a scenario with an agent and with the American National portfolio. But without any further ado, Ronnie, I'm going to give the floor to you, and then we'll kind of interact as we go along. But I'm excited to have you on, and I know you've got some great stuff with American National and what you're going to go over. So the floor is yours, and hopefully technology continues to work just fine.
Thank you, Nathan. Excuse me. Appreciate that introduction, and appreciate all of you folks joining in this morning and participating in our presentation. So, thank you to Praxis to setting this up, Nathan, and giving us this opportunity to present American National. So today the presentation going to just kind of give everyone a brief intro of American National for any of you that may not be so familiar with us, and then just do kind of a walkthrough of our product portfolio so you can be aware of what we have to offer. And along the way, a couple of sales ideas as to where best our products tend to position themselves in the marketplace. And then touch a little bit on our process, how to actually process business with us. And then in closing, I'm going to touch on one of our qualified platforms where Anaco offers a full turnkey 401k solution for non-registered life licensed only agents. So I'll get into more detail on that piece as we get towards the end. So without further ado, just moving along here. For those of you that may not be familiar, American National was founded in 1905 in Galveston, Texas. So we're 116 years and counting, and obviously a very solid company. We always like to kind of promote why Anaco, because many times in the field, to be perfectly frank, we discover that not so many people are aware of Anaco. Money Magazine in 2020 published an article where they were actually identifying some of the best life insurance companies at that time. And, as you can see here from this little clip from that particular article, that, it references us as maybe an old school insurance company, but yet we offer one of the more robust offering of life insurance products with an A rating from AM Best. And, when you talk about AM Best and the various rating agencies that rate insurance companies, particularly AM Best, because their concentration is life insurance companies, we've been A rated for 80 consecutive years by AM Best. There's actually only a handful of insurance companies out there that can make that claim. So, in the field, if you're a producing agent and you're making recommendations to your client, our clients, obviously, the reason you want to highlight you're promoting an American National product is because of our quality rating and more importantly, our consistency in upholding that quality rating over 8 decades. So just to touch on our products, we offer a very diverse portfolio of products, as you can see here. We've got our whole life product with a minimum face amount of only $10,000. We offer, without a doubt, one of the most competitive guaranteed universal life products in the industry currently, with a minimum face of $25,000. And then we have 2 IUL products. We have our Performance IUL. And then down at the bottom, you'll see new. We just launched that at the end of summer of last year. It's our Protection IUL, which basically is an accumulation product, but has a guaranteed death benefit tied to it, similar to our guaranteed UL product. And then, of course, we have term. And you can see there the minimum face amounts for those respective products. So let's talk a moment about our signature whole life. As you can see here, it is a minimum face of $10,000. All our products are fully underwritten. We do offer an accelerated underwriting platform as part of our underwriting program, which I'll touch on later on in the presentation. But the takeaway here is that we offer, from the whole life perspective, probably one of the least expensive whole life products in the industry. Obviously, we can't compete with the large mutual companies that offer whole life products as far as accumulation. But where you're looking for client situations that just want all those guarantees, but are looking for the lowest cost option, you need to take a look at our whole life product. And additionally, this whole life product can serve as a potential final expense alternative. Now, granted, your senior citizen or elder client will need to be able to go through underwriting. So in those cases where you've got very healthy, senior citizens or elderly clients, you will definitely discover that if they can be underwritten, even standard or better, which is typically possible for numerous senior citizens and elderly folks, this product will be significantly cheaper than a guaranteed issue product by far. So as I try to promote in the field, if you have an elderly client and they're not opposed to a paramed, this could be a final expense alternative to keep in mind. And then there's our guaranteed UL. I mentioned it in the introduction just a moment ago. This particular product is without a doubt one of the most competitive in the industry. As you guys know, this is a spreadsheet product. It's governed, if you will, within the industry by AG 38, which was a regulation, so to speak, mandated on insurance companies many years ago, which basically stipulates that carriers have to take into account particular reserve ratios that they uphold internally with their portfolios in order to price these products. Well, American National maintains some of the highest reserve ratios in the industry simply because the founding family that founded American National has just simply been very conservative through the lifetime of American National. So in view of AG 38 requirements, Anico is able to price our GUL very competitive. We will pop up as number 1 or number 2 on a spreadsheet. So you can see here that this product also carries a cash out rider. So there's a return of premium rider available at anniversary 15, 20, and 25. I really don't speak much to 15 because it's significantly less than 100%, but anniversary 20 and 25, the client can get 100% of their premium returned. The only stipulation there is the client has to be underwritten standard or better at issue, and that 20 or 25-year ROP will become an automatic rider at no cost. So positioning this product is really ideal for your clients who maybe are beyond the the age of really being able to accumulate an IUL. So folks in their 50s and older, mid 50s and older, this GUL is going to be a great fit for them. So you're going to want to have cases like that. You're going to want to have your agents take a look at us, at least run this product, take a look at the illustration. I think you're going to find it's going to be very competitive. And as you can see there at the bottom of this slide, the client can determine the guarantee between ages 95 and 121. So they can select it. If they only want to guarantee to 100 or 105, they can do that. And you can see we do single pay and short pay scenarios with this product. So very competitive product. Keep that in mind.
Yeah, Ronnie,
Yes.
if one is if it's a table case for the ROP, is there a cost or they just get the standard premium return?
So good question. If they are table rated, as long as they are table 4 or better, the 15-year option stays in place. The 20 and 25 years simply falls off as an option.
Okay.
If they're below table 4, then none of the ROP options are available. So it's an automatic rider at no cost, subject to those requirements. If they meet those requirements, then it's a rider. If they don't, then it's not a rider. Make sense?
Yes.
Okay.
Before you move on real quick, Ronnie, too, I just want to illustrate, because within the industry, you're absolutely right, is to stress the point. Your GUL is one of the most competitively priced GULs in the marketplace. That's what a lot of agents, some of the agents that write a lot of business with you guys know that. But for everyone here that's doing marketing, if you're running a case that with an agent and they're talking about a GUL, the first place that I would go to is bringing up Anico and having that conversation, running them a quote, or at least giving the information to be able to run it. Because more often than not, that price is gonna beat out whatever carrier that they're using, and that will allow you all to earn that business. So if you're talking about points to keep, I'm going to backpedal a second, but the GUL is definitely one of them, and the price, because it is very much a price game, and then the whole life then as well, going back to that, is just a quick alternative to final expense and simplified issue and guaranteed issue products. As long as the client is semi-healthy, that's going to save them a bundle of money, give them more death benefit. So that's a big deal on those two things of value props for Anico to listen up to and pay attention to.
Thank you for that, Nathan. Just as a side note to the GUL, because we are one of the most competitive carriers currently, we're also finding ourselves being attracted, if you will, to large cases. I'm involved with a number of large cases currently with a number of agencies that I'm responsible to. But just as a side note, we maintain our own internal retention at 5 million. We auto bind to 20 million, and we jumbo to 50 million. So I can just tell you, in the last 6 to 9 months, I've been involved with cases as high as $20 million. So keep that in mind. This product is very competitive in the large case space as well. So our term, obviously not much to say about term other than the minimum face is 100. Really, the takeaway here on term is, number one, we do include our living benefits on our term policies, as well as, of course, our permanent. I'll get into a little more detail on living benefits as we proceed, but in the meantime, really the only condition for living benefits in our products at Anico, including term and permanent, is that your client has to be underwritten table 4 or better, and it's an automatic add-on rider to the policy with no additional charge. The takeaway on our term that's very, very important are the conversion privileges that we make available on our term. In summary, all of our term policies are fully convertible without proof of insurability within the term period of the policy or before the client turns 65. And that's very, very important because not all carriers allow conversions into all of their permanent products. We do. So our GUL or IUL or whole life, it's fully convertible without proof of insurability. So keep that in mind on our term conversion privileges.
Including the new plan?
What's that now?
The new plan.
The Protector IUL.
Oh, the protection IUL, yes, sir. So any permanent products we currently offer at the time of request of conversion are eligible to be converted to by the client. And so, yeah, that would also include that new protection IUL. So quick split sale, a term GUL, you've got a client situation, maybe their budget is a little tight. They can really only afford term. They're looking for some protection. One takeaway might be to have that conversation with them where, look, why don't we can go as low as 25,000 on our guarantee UL. Why don't we split this case and get you your term, but also get that 25,000 GUL so that product can essentially be available for your lifetime and serve as your final expense or burial expense product. So keep that in mind, not only our whole life, but I've seen some scenarios where our GUL, because the minimum face is only 25,000, I've seen scenarios where agents have used that product as a $25,000 final expense option for elderly and senior citizen clients, again, that are reasonably healthy and can go through underwriting. So our IUL, look, our IUL is similar to everyone else's. Basically, I always find in the field that it's interesting how one carrier might try to tout their IUL over the other, because as we all know, at the end of the day, the IUL illustration is simply based on historical, back data. And so, going forward, it's as I always say, it's anybody's guess. You might as well just go to the craps table and roll the dice. But the takeaway here is with regard to our IUL. We did launch some additional crediting strategies that I'll touch on here in a moment at the end of last year. So that helps broaden our product credit strategy options. And we do have a minimum face of only 25,000 on this product. So, that allows for lower face amount scenarios. So our new product that we launched at the end of summer is the Protection IUL. As you can see here, it's basically a combination of our Performance IUL and our GUL. You'll notice the underlying differences, though. We did set the minimum face amount of $250,000 so that it wouldn't take away from business on lower face amounts for our IUL or GUL. But the other thing is, you can see we have the range for dialing in that death benefit expands from as low as age 80 to all the way to 121. And so this product allows you to do that. And again, I would say where you have those clients that want to build cash but still have a death benefit guarantee, regardless of how the IUL performs, this will be a reasonably competitive product in that space. So I mentioned the crediting strategy. So, initially our IUL product was pretty much limited to the S&P 500. We just launched late summer. There's now 3 crediting strategies: that S&P 500, the NASDAQ 100, and then also we just added this S&P Mark 5%, which is essentially a low volatility index crediting strategy that will move money literally daily, depending on how the VIX is moving in the market. So just some more options for your clients so that they don't feel constrained to just the S&P 500. So here's another quick sales idea. When you're talking to clients who are looking to accumulate cash in an IUL for supplemental retirement, generally those are going to be your clients in their 30s and 40s, higher income. They have they have excess disposable income, and so they have the wherewithal to deposit $500 a month, $1,000 a month, even more into an IUL. Well, keep in mind, in those scenarios with today's products and those living benefits that are typically tied to most most permanent policies in the industry. If the client has to tap that living benefit and any payout is made by the insurance company, from $1, those payouts come from cash value first. So the notion here is that you got a client, they want to put in $1,000 a month, $2,000 a month, whatever that number is. A takeaway here might be to recommend to the client, look, what if we put 80% of that money into the IUL, and let's put 20% into this GUL, and let me explain why. If for whatever reason you need to tap a living benefit down the road, we will not have to disrupt that IUL. We will disrupt the GUL, enabling you to access that living benefit through the GUL policy. The good news is if the client is issued at standard or better, as I mentioned earlier, well, they'll have then access to that 20 and 25-year cash out or return a premium rider at 100%. So 20, 25 years from now, if they're now into retirement, they don't really necessarily, their dynamic, their life dynamic has changed, and they don't necessarily are concerned about the illness rider, they could surrender the GUL and get 100% of their premium back. So this would just be a great, kind of a great hedge for them over the next 20 to 25 years to protect that IUL policy by doubling up with the GUL and letting that GUL serve as that living benefit alternative. So as I mentioned, all of our ABRs are living benefits. ABRs are our accelerated benefit riders. Our living benefits are automatic riders to our term and permanent policies. Again, as I mentioned earlier, it's just a function of a rating of table 4 or better at issue, and there's no cost associated with that rider. As you guys know, and this is just kind of to rehash, but we know why statistically in this country and historically, why most people end up filing personal bankruptcy is because of unexpected medical expenses. And so you can see here that nearly 80% of personal bankruptcies in this country are as a direct result of medical expenses. And so therein lies for all of us in the life insurance industry, loving those living benefits, because that's a talking point that I always recommend should be where you start the conversation to begin with is, Mr. or Miss Client, I've got something here that you can actually personally benefit from. And if something happens to you, as far as mortality is concerned, well, then you got a death benefit for your heirs. So if you look at the living benefits at Anaco, you'll see here, just like all of our competitors, we've got the terminal, the critical, and the chronic. You'll see here we have 16 illness triggers, so to speak, on the critical illness. I know we have, I think it was Debbie out in California listening in. You'll notice that the 3 illness riders at the bottom, 14, 15, and 16, are in red text because the state of California simply didn't approve all 16 of our triggers. So only the first 13 are applicable in California. And then as you see with the chronic, which is basically the long-term care lookalike, or the 2 of the 6 activities of daily living. The footnote I want to make on this is I know a number of our competitors are promoting that they have 4 living benefit categories. Well, you'll notice that the other living benefit category is critical injury in concert with critical illness. Well, you'll see there that 4 of the critical injury triggers are inclusive of our 16 critical illness triggers. So we've just chosen not to break it out and to just consolidate. So we actually have all of the triggers, including the critical injury, that our competitors have as well. So the other takeaway on that living benefit that I wanted to highlight for you, I did mention earlier that you had to be underwritten table 4 or better. Well, we do also have a minimum death benefit requirement. For terminal, it's $25,000, and for critical and chronic, it's $50,000. So you'll need to keep that in mind. Obviously, with our term policies, that minimum death benefit of $100,000, the rider's automatic. But with our permanent policies where you have a minimum death benefit of $25,000, you won't want to obviously talk about living benefits unless you're speaking about $50,000 or more in death benefits. So just keep that in mind. And then you'll notice there on the maximum available acceleration for clients that policies are issued from 65 and under, it's up to 2 million, and then over 65, it's $1 million. So if a client has a policy of $3 million at issue at age 60 and they needed to access the living benefit at some point, obviously we're only going to consider access up to $2 million. And you can see here that when it's time to access that living benefit, we offer partial or fulls. If the client wants to access the full amount, then of course the policy would terminate. If they want to only access a portion, then the remainder will remain in force. Now, the takeaway there, and I'll touch on that in a little more detail in the next slide, I just wanted you to see here, this is really the process that we have for qualifying for that living benefit. So if a client experiences a chronic or critical illness or terminal illness, they're going to basically make a claim. So the first step is that they make a claim. We receive that claim. And then our medical director and senior underwriting folks will review that claim request along with current attending physician records for that client. And we'll ultimately determine what we would qualify as an adjusted life expectancy. And so that will ultimately determine what percentage of the death benefit we're going to offer in that claim. So if you look here at a moment how that living benefit is calculated, right? It's that whatever the eligible death benefit of the policy, let's say it's $1 million. And then we're going to make that actuarial discount, which is basically like the present value of the dollar. We're going to take into account the ailment, the life expectancy, the adjusted life expectancy of the client based on them experiencing that condition, the age of the client at the time of the claim, and what type of policy, is it term or permanent? And then ultimately there's, as you can see, a small fee, and then is there any policy loans outstanding? And then that will ultimately determine the benefit. Just to kind of give you a summary of how we kind of look at this, for a life expectancy example, and I always try to emphasize this in the field to agents, to make sure their clients understand that, as you saw from one of the triggers on critical illness, one of them was a heart attack, for example. Well, as we know, many folks will experience a heart attack, be rushed to the hospital, have a stent or two put in, and walk out the next day. And so in a situation like that, it maybe didn't really impact the client's life expectancy at all. And so with that said, we're going to basically make little to no offer to the client, even though they're going to step forward with a claim of a heart attack. So, it's all a function of the severity of the impact to life expectancy that will determine the percentage of death benefit that will pay out. So this slide might be hard to see. This is basically a snapshot of one of the pages of our illustration, which is a hypothetical accelerated benefits. Some of you maybe have seen this that might be familiar with our illustrations, but you'll see here that we'll highlight various ages. This is just a sample illustration of a 45-year-old female for $500,000. And you'll notice there that we're going to kind of show at certain attained ages, this could be their hypothetical percentage of death benefit we may make available in a claim. In summary, the easiest way to kind of, I like to explain this in the field, you can see there the 4 categories. We have terminal, and then we have for chronic and critical, we have a minor impact, a moderate impact, and a severe impact. Well, in percentages, as many of you are familiar, terminal is typically about 90%. So for all policies, almost any insurance company, someone has a terminal illness and can validate that with doctor records, they'll get offered about 90%. Well, minor, moderate, and severe, you can basically look at that as about 25% to 50% to 75% respectively. And that's kind of what the client can anticipate to expect in those situations where they may file a claim. So moving along wanted to just kind of touch quickly on our process, really more specifically our underwriting process so that.
Yeah, Ronnie,
Yeah, go ahead.
quick question on the writers.
Right.
Once a triggering event occurs, what's the time frame? How late can they file for a benefit?
So our recommendation is always to file immediately, because then the waiting period has to start, right? So whether it's a critical or chronic, I think the chronic, you got to wait 90 days anyway before the benefit can be paid out. So you're going to want to file that claim as quickly as possible, because then we still have to do the 90 days once the claim is approved. On critical, it's 30 days. But yeah, I mean, basically, the longer they wait, the greater the disadvantage to them is. There's really no timeline there. It's just a matter of emphasizing your client, file immediately if something should happen to you.
And once the offer is made, is there a time element to the decision whether to accept it?
Yeah, generally we're going to look to them to make a decision within 30 to 60 days to accept it. If they don't accept it, then the policy just remains as is. If they accept it, then they have to tell us, do they want the full benefit or a partial? And then our living benefit platform is based on indemnity versus reimbursable. So we don't need receipts. We're just going to give them a lump sum check if that's how they want it.
Okay, thank you.
Okay. Does that help?
Yes.
Okay, good. So on the underwriting process, when you submit an application to us, it's going to go into one of these three buckets. And you can see there that Express and Express Plus are our accelerated underwriting platforms, where you can see the parameters of the ages and the face amounts that are eligible for Express and Express Plus. And then, of course, everything else outside those parameters is full underwriting. And the primary objective there is that, ultimately we're, like many carriers, using LexisNexis and using them to facilitate the underwriting process, ultimately with the goal of bypassing the paramed. And you can see here that the process is always evolving. As we build out more data, we're able to expand the usage, if you will, of what LexisNexis provides us. But the bottom line is, you can see here that currently we're approving about 80% of cases under $250,000 and up to age 65 within 3 days. And in some cases, they're computer approved within the same day. And then you can see for Express Plus, there's those brackets of ages and face amounts: 18 to 50, 250 to $1 million, and 51 to 60, 250 to $500,000. And obviously, since these are larger face amounts, we're not able to approve as many without parameds, but we're approaching 50%. The good news is that at Anaco, we pay commissions daily. So you submit an application today. Let's say it got computer approved within today. We issue it tomorrow. We will pay commissions 48 hours after issue every day. So you would hypothetically get commissions on Monday. So that's the good news with Anaco, because we do pay out commissions daily. And I mentioned that LexisNexis, I know many of you listening in are familiar with LexisNexis, but I do find in the field sometimes people aren't real clear on LexisNexis. I like to refer to them in layman's terms as just a lifestyle score. We have the credit score. Everyone's familiar with credit scoring, but this is really more of a lifestyle score, and what actuarial has determined in the insurance industry is that lifestyle does have an impact on mortality. So you can see here some of the items that LexisNexis looks for. And so ultimately, LexisNexis generates a life risk classifier score, or an LRC score. And then that is the only information we get from LexisNexis. So if a client wants to know, how come LexisNexis gave me a score of XYZ, we have to refer them to LexisNexis directly. So we just get a score, and we have certain thresholds based on our underwriting parameters of where that score needs to be in order for the client not to be required a paramed. But the takeaway for us is that some of our competitors will actually decline a case for a low LRC score. With Anaco, we never decline a case based on the score. We simply require a paramed. So if the score comes in below our threshold, we go back to the agent and say, okay, if the client is prepared to do a paramed, we will let the paramed dictate our underwriting. So, that's important because you need to be aware of what carriers have this practice, because obviously if they decline your client, well, they have no choice but to report that to MIB. So now your client is now flagged with MIB as a decline somewhere. So when you reapply elsewhere, well, that's one strike against the client with that decline out on MIB. So keep that in mind. This is relevant, I think, when you're when agents in the field are considering carriers. A couple of helpful tips. I know when I was in Vegas at the 3MARC conference back in October, 3MARC highlighted that nearly, I think this percentage is correct, almost 85% of the agencies and agents in the field that work with 3MARC are now using EAP. And so, of course, we love that. EAP is it almost guarantees an in good order application. But what we've noticed relative to LexisNexis is there's two items on the application that tend to kick out the application. And this is really going to be specifically for those applications that would qualify for our accelerated underwriting. So those certain face amounts and certain ages. It's very important to highlight to agents in the field to take their time when it comes to prescriptions. Because if the application is not consistent with the script check, it's an automatic kick out by LexisNexis, and it's an automatic paramed. And then the other one we see often is, believe it or not, driver's license. We see a very high percentage of either incorrect or transposed driver's license numbers on applications. And unfortunately, because we're all now working through EAP and everything's electronic, it kicks it out also. So these are the two primary areas we try to highlight in the field with agents to just kind of slow down, dig a little deeper with your client on prescriptions, and make sure you double, if not triple check that driver's license number when you enter it into the EAP. And so increasing or improving those two categories alone, we anticipate a significant increase in the number of accelerated underwriting applications that would qualify and not require a paramed. So my last piece here, just a few more slides in view of time. Don't want to take up too much of everyone's time, but I wanted everyone to be aware that at Anaco, we do offer basically a qualified pensions platform. And in particular, I'm just going to highlight today our 401k platform. Some of you may be already familiar with it. I want you to just really look at Anaco as your small business 401k platform. We're really only in tune for those smaller companies with like 50 or less employees. We offer a full turnkey. You can see here, this is basically a request for proposal form you're seeing there. It's 4 pages long. Page 1 is actually the cover page. Page 2 and 3 are some basic information that will need to be gathered from the business owner's business and their intentions. And then page 4 is a census, which is basically a detailed spreadsheet of all the employees, hire date, ages, job position, salary, et cetera. And so we're going to look at all this, and in cases where maybe you have an existing, you come across an existing plan, we also do reviews and will do takeovers. And so In those cases, the only additional information we would need above and beyond our request for proposal would be a copy of the current plan documents of that 401k plan. And the great news here is that, you know, this is just another option that the agent can have a quiver in their hat, particularly where they have business owner relationships. And so you can see here that this particular platform is a non-registered group variable annuity that holds, if you will, the mutual funds. And you can see here, it's called our WealthQuest 3 unallocated non-registered variable annuity. Requires no security license on the part of the agent, just a life license is all that's required. And they can be agent of record of the plan. We have 54 mutual fund options based on 6 fund families. And we have Morningstar as our registered investment advisor that I'll touch on here in a moment. Oops. Wow, what happened? Nathan, you still there?
I had myself muted. Yes, I'm still there.
Okay, I didn't know if maybe I lost you because all of a sudden my PowerPoint kind of took a nosedive on me. Hold on.
I saw that.
All right, so let me do it this way. So I'm just I apologize, I'm shrinking the screen. I don't know what happened. So I mentioned that we have 6 mutual fund families. As you can see here, there's many which are familiar to most folks: Fidelity, T. Rowe Price, Invesco. We all see these commercials on TV. You can see the fund options. I mean, aggressive growth, balanced, high yield bond. We even have target funds. So our 401k platform is very similar to any standard 401k platform out there. We even have our own website for employee participants can manage their own accounts online. So it's a great platform, you know, and basically, you know, the target audience here, as you can see, let's see. No, excuse me. So, and I mentioned the Morningstar registered investment advisor. So as an agent, you're not a securities license advisor. You can't really recommend to participant employees how to invest their money. And so that's what Morningstar does for the agent. Because obviously the process is the agent's going to submit to us that request for proposal. Our folks in our pension department in Galveston are going to build out a plan, present that plan to the agent. The agent is then going to coordinate with the business owner client a joint conference call with our pension folks, who again at that time will re-present the proposal to the client in concert with the agent. So ultimately, if the client, business owner client says yes, let's do this, we're gonna put together a participant package that we'll send to the agent, so the agent can go out to the business owner's place of business and sign up employees that want to participate in the 401k. So while they're signing these individual employees up to the 401k plan, they will more than likely find themselves being asked, so how do you recommend I invest? This is where Morningstar comes into the play here. Morningstar basically provides a one-time free look asset allocation model to each employee. If the employee chooses to use Morningstar going forward, you can see here that Morningstar basically charges to the employee's account 50 basis points annual fee. And so that's how the agent would sidestep making any recommendations.
Behind,
Say again?
I think you're one slide behind.
Let's see. Target audience, yeah.
There we go. Oh,
okay.
I'm sorry. No, you said I saw 12.5 basis points.
Well, yeah, because that's Nathan, that's per quarter. So I just rounded it up to annual.
Yeah, absolutely.
So it's 50 basis points annual fee basically to the plan participants. So again, you know, as the agent of record for the 401k platform, this is your, as I mentioned, our target audience is for 50 employees or less. As you can see, we work with all types of businesses, sole proprietorships, partnerships, LLC, SC Corp, etc. And we are our own third-party administrator in-house. So we're going to basically be full turnkey. You really just as an agent of record just have to bring is really the relationship manager. You're just bringing the case to the table, and we pretty much take over from there. As you can see here, we're going to do complete plan design. We're going to develop the fee structure. We're going to provide, obviously, the choice of funds, and then obviously provide Morningstar as the advisor. And so, again, this is really just the way I look at it, just a segue for an agent to leverage those business owner relationships. I once had an agent tell me some time back that he was really hitting a brick wall with this one client of his that was a business owner when it came to, offering life insurance and whatnot. And so he came in from a different perspective, came in with our 401k platform, ultimately did a 401k with that client. And once the 401k was in place, they were able to then circle back and ultimately provide life insurance. So, there's more than one way to skin that rabbit, right? So a couple of quick slides in closing. This is our base website. You can go onto this website and access product information, marketing material, etc. The only thing you can't access through our website until you're appointed and we provide you login credentials is to utilize our illustration platform and our e-app. The only takeaway on our e-app is that our e-app is proprietary. We don't offer an e-app through like iPipeline, so the agent would have to come to our website to use our e-app platform. And last but not least, here's your go-to resource. Obviously, I'm always a go-to for those of you listening in, but illustration requests, you go to our field support center. These folks are very responsive. You can call them, email them. They'll provide you login support. Again, they'll run illustrations. A lot of times I'll go to them for an illustration request if I'm on the road. I'll have it emailed back to me in less than 5 minutes. So they're very responsive. Leverage them however you wish. And then last but not least, this is my contact information. You're always feel free to reach out to me for any support you might need from Anaco. So Nathan, with that said, that concludes the presentation. And if you'd like to open up for questions, please do.
Yeah, I mean, I'll just, before anyone has anything else, I want to just say about the 401k plan. Like that's another great option, talking about value proposition that's unique within the industry. I mean, I think there's only one or maybe two other places that have anything remotely close to that for those that are life insurance licensed, and Anaco's is definitely top notch at how it works. And just real quick to ask like one or two, I know you kind of had a lot of stuff on there, but comparatively to the rest of the world in the 401k space, what are like the one or two major reasons of why clients, business owners should be looking at using Anaco for that 401k option if they're 50 or less employees?
Well, primarily there, Nathan, because in the small business marketplace, we will be the lowest cost provider. We have limited administrative capabilities, and so that's why we limit it to 50 or less employees. That way there's some room for growth. We'll actually consider some cases where there's maybe 70 and 80 employees, but our limitation is that, we recognize there will probably be growth for the business. We just don't have the administrative capacity to handle large 401k plans. So, we leave that with the big boys. And so I would just say, when it comes to the smaller plans, the big boys really don't want to get involved because there's just no economies of scale for them. So in the small business marketplace, I would say we're going to be one of your most robust and least expensive.
Perfect. Anybody else have any questions on the information that they saw? Ronnie did that good of a job, huh?
Yeah, I found it to be pretty thorough.
Well, if we'll hang for a couple minutes, see if there's anything else. I mean, Jake, anything on your end?
No, I mean, again, coming from a slightly lower educated side of the industry, I liked it. I understood it. So I can see how I'm able to pass this along to who I work with. So
Perfect.
Just one quick question, so I'm clear. For the whole life line, and I know I can look at the sheet, but when you get into the older, like the final expense, there is no amount that is non-medical, is what you're telling me, even at 10,000.
That is correct.
Okay.
Yeah, and the other takeaway there too, Jeff, is that because our accelerated underwriting program caps out at 65, so obviously anyone over 65 is full underwriting. So, that's why I kind of highlight, if you've got a senior citizen client or an elderly client that's healthy, which there are many, they may not be opposed to a paramed. And that being said, if that's the case, why not look at us as a less expensive alternative than guaranteed issue?
Mhm. Okay.
And you mentioned it's a participating whole life too, which
That's correct.
is another big deal within the value prop for a whole life policy, especially if you're comparing against the simplified issue policies of the world.
Yes.
Anything on your end, Jody?
No, I just really like the 401k plan, and I think I'd like to learn more about that as we go on.
There's definitely, Ronnie has some great materials on that, and the 401k plan is a amazing option for those. I cannot stress the point of what Ronnie said of it being literally probably one of the lowest cost solutions in that marketplace for employees that are around that 50 or less. It's a good plan, and for a life insurance licensed agent to be able to earn something off of that is another big deal for a lot of those agents, because that's why most life insurance agents don't even try and touch that.
Yeah. Hey, Nathan, if I can just take a quick minute in
Yep.
light of Jody's question. I popped up our website. Can all of you see the website?
No, we still see the presentation. I think reshare your screen.
Actually, what we're seeing is welcome practice.
Yeah. There we go.
How about now?
Yep.
Okay. So real quick, in light of Jody's question about 401k. So Jody, if this is our base website that you may be familiar with that I mentioned during the presentation, you're going to go over here to products and services. And you'll see here under advanced concepts, pension sales. We have two options, getting started and request a proposal. The request for proposal link is basically the web-based electronic version of our request for proposal hard copy. But getting started, you can go to getting started, and when you click there, it takes you to our platform for our pensions, as you can see. And you can request a proposal here. As you'll notice, getting started, we have some marketing materials, et cetera. We've got some detail on our retirement products. The one I mentioned was our unallocated variable annuity. But you'll notice if you scroll down to marketing materials, learn more, and you click on learn more, you'll see here we have a fairly broad selection of material that you could use. Here's our request for proposal. We even have it in Spanish. We have a business owner's guide to retirement plan review. We have small business retirement planning brochure in Spanish as well. Here's the brochure on our 401k plan. And I didn't go into it, but we do offer in addition to contribution plans, we also offer benefit plans like cash balance, and 412E3s, because so just know that we're pretty broadly based on our pension capabilities. You probably noticed when I clicked on the retirement products, you see over here, we have our limited pay whole life. Well, we use our limited pay whole life in concert with our Palladium group fixed annuity whenever we're building out a 412(e)(3) plan. So just know all of that's out there, but I would just leave it this way. As I presented in the field, I tell agents, look, where you have business owner relationships, you need to let them know that you have qualified options now for both their employees and themselves. And if the opportunity, if they get a favorable response from that business owner, I always tell them, call me, and then we'll build it from there.
Yeah, that's a very big value proposition that you all have as marketers. That's unique within the industry. Not tons of agents understand it, know about it. Pull and Ronnie to those conversations, and that's where again American National is going to shine within that context of something that's unique and out of the ordinary, rather than, and of course, life insurance is great, love it, it's awesome, but to put your foot in the door with a new agent that you're talking to, finding the things that are unique with the industry that they probably don't know about, and offering those solutions will allow you to have those conversations to get into other products and services and things like that. So that's why I love things like this. And on top of that too, because that's another thing that I always stress with carriers is their microsite is, again, you don't need to have a writing number to get access to most of the marketing materials, which is another thing that agents find super helpful, that you can direct them to and you all can use without having to be the expert on it. You can just look up different things within here. So I would save this and bookmark this website and navigate and know a couple of things of where they're at, so you can find that information extremely quickly, and you become that resource and that gateway to all these different products and services.
Mhm. Yeah, Ronnie, one other, 3Mark recently had some information from American National about federal employees. Can you briefly touch on that?
Yeah, so this is our website again. You'll notice here, I'm back to the main website. I'm clicking on agent resources, and under agent materials and life, you're going to see worksite, right? So you would click on worksite. And so we do, within the federal, and this is another place, if time is okay, I can take a couple of minutes here.
Yeah, we usually, on our end, we spend a couple minutes, but we have technically till 11 if you have a couple minutes to go over this. So we're good.
Okay, thank you, Nathan. So within the federal government workplace, if you will, American National is actually one of the few, if only, insurance providers that are available outside of FEGLI. And I'm sure some of you are familiar with FEGLI. FEGLI is the Federal Employers Group Life Insurance Program, which is basically MetLife, are the remnants of MetLife in the US. It's the term insurance that's provided to federal government employees, and they pay for that through payroll deductions, right? So we have access to the payroll deduction platforms that exist within the federal government workplaces. But the important takeaway is we do about $10 million a year in life insurance target premium in the federal government space. And over 70% of it is permanent insurance. And so really, but the only way to really get into this marketplace is the agent has to have access through a relationship, right? And so we can't really do anything there. We're really just kind of like the back office support facility for the agent. But if an agent has access through, maybe they know a postmaster, they're a neighbor to a postmaster where they live. If they can gain access to a government employee site, they can then come in and offer up ANACO, if they're appointed with us, as an insurance alternative to the federal employees. And the important takeaway here is, when you think of federal employees, what do you think of? You think of permanent, right? Not to say this in a derogatory manner at all, but many federal government employees feel they have a job for life. They have medical benefits for life. They have a pension for life. What they don't have is insurance for life, because the FEGLI insurance is term insurance on the MetLife platform. So if an agent has access to, could be even a former police officer, and he can have, or she can have access in retirement to the lieutenant or the captain of where they worked from, if they can get into that office, then they can come in as an ANACO agent and offer these employees permanent insurance. And I'm telling you, that is really the takeaway here, is that you can come into these locations and promote permanent insurance. And that's where they all think. And that's why in this platform, we probably do about 70 to 80% of our sales in this platform, or in this space, is our permanent insurance.
So what, if I'm understanding you correctly, you're saying if I walk into my local post office and introduce myself to the postmaster and get a green light to talk to those people that are associated with that location, from there, how do I go about getting them enrolled and using the government platform?
So here's the challenge, and again, I'm not the expert on getting into the marketplace. You'll see here some of these links we hear, prospecting federal agencies, right? So we have some pieces here that some agents can work with. And here's, for example, a list of federal agencies that maybe they know in their area, right? Or here, getting started in the federal employee and postal. So we have an 8-page brochure on, how an agent can maybe gain access, and what's the primary variances between the cost of life insurance that the employee can purchase under FEGLI and or what they can get through ANACO, right? Lunch and learns, work site. So the takeaway is, with the question you asked, Jeff, is many times a lot of these locations, as I understand it, aren't allowed to have outsiders in for for maybe a lunch and learn, or to be able to present your services as an alternative to FEGLI. Some will, and that's the key. If you can get a postmaster to let you in and give you, hey, I'll tell you what, Jeff, as Mr. Postmaster myself, you're welcome to come in at 6 o'clock tonight, and I'll mention it to everyone that you're coming, and whoever wants to stay and listen, there you go. So that's really the takeaway here, is gaining the access. And where do they give you access? They may say, look, we can't do anything here at our location, but I'm happy to tell my all of my postal workers that, here's your information, and you're going to be available over at this venue tonight or tomorrow or whatever. So that's the whole challenge in this space, is access. If you can get access, Jeff, we can basically back you up with the products that are eligible in the space, and more importantly, the access to their payment systems. One of them is called MyPay. And so these federal employees can literally go on to their MyPay system and redirect their payroll deductions. And that's how they basically coordinate assigning premium payments for an ANACO policy versus say a FEGLI policy.
So all the information as far as what plans in the portfolio are eligible will be all in this area of the website?
Yes, so all of our products are available in this platform. So you could go in and offer up our whole life, our GUL, our IUL. They're all eligible.
So
Perfect.
talking about Jeff, you already are going that direction, but for everyone else, talking about a sales idea, for generating, of course, what's the number one question that every agent asks is, how do I get in front of more qualified prospects? So using Anaco in the federal employee space is definitely an option for that. And, you take a couple of these pieces and say, here's some direction on how to do that. And then they go do the work and the legwork to get into a place like that. They now have an option to be able to offer products to federal employees, where previously that's basically an individual sale rather than coming in and doing multiple sales for one place, if you can find the right person to get into.
So, yeah, this is really valuable, Ronnie.
Well, good. So Jeff, the takeaway here, you'll notice I'm highlighting down in the bottom. There is every federal employee, and you may already be familiar with this, has a federal employee almanac. Anaco is in that almanac. And so that's how the federal employees, are in a postmaster, hypothetically, they know that we're in that almanac. And so we are an approved alternative provider in that space. So no, it can be very lucrative. And I try to promote it in the field with some agents. I just let them know, hey, if your neighbor works for the post office, why don't you ask them if maybe they could get you an introduction to the postmaster of their location. Maybe you can get a lunch with that postmaster and then see if there's a way that they'll give you access.
So if I just happen to be out socially and a person I'm with works for the post office, either as a carrier or whatever capacity, and raise this and say, yeah, I'm interested, they don't need the permission of the postmaster. We're just looking for a center of influence by approaching the postmaster. Am I understanding that correctly?
Well, so basically, Jeff, in that sense, you still need to get the approval of the postmaster to have access to that location. If you're just gonna, if you're friendly with a postal worker or a postal carrier, as you mentioned, then basically you're going to end up just working with them one-on-one and just do an individual policy. In order to go through the federal, through their MyPay, you're going to have to, that postal location is going to have to approve your access to that location.
Got it.
That makes sense.
But yeah, there's some tools here, Jeff, on the quick links over here. You see, we've got even a training guide. You see here, we have a prospecting tool for unions and federal recognition. So you can take a look at some of those tools and leverage them to your benefit.
That's another great one.
Yeah, between the 401k and this, there's some really solid marketing ideas here, without question.
Yeah, absolutely.
Well, good.
Well, on that note, Ronnie, I appreciate you sticking around a little bit afterwards and going through that. Those were great information. Again, we have Ronnie's information in the important contacts, so you know where to find him. Hopefully, you write down his information as well. But last thing that I'll say for Ronnie, and then we'll kick Ronnie off, and then we'll have a couple minutes last stuff. But Ronnie is going to be on next week for the agent facing webinar. So next Wednesday at 11 a.m. Central Standard Time. So Ronnie, we'll talk afterwards, but I think we might have found two focuses for next week if you're able to do the federal marketplace and the 401k. I think we'll do a briefer section on the other stuff, and then focus on like these two sales ideas for Anaco, because I think that's going to be a better, from what I'm hearing from everyone here and what they're going to pay passing out, I think that'd be a better thing to go over for next week potentially. But we can talk. You and I can talk afterwards.
Okay, that sounds good. Nate, you just let me know. We've got till next week to circle back, and you let me know how you want to proceed.
Sounds good. I'll touch base with you later this afternoon, but yeah, next week, 11 a.m. The information is on band. I'll have a LinkedIn event set up as well that I'll invite everyone to so that we can share it. But let's see if we can get some people to this, because those are some great options, and I'm excited for next week to be sharing this with some agents as well.
Okay, very good. Thank you.
Sounds
Hey,
good,
so
Ronnie. You have a
Happy New
great
Year,
day. We'll
Ronnie.
talk soon.
All right, thank you guys. Appreciate your time, and y'all have a great day.
You too.
Bye.
All right, just wrapping up on our when we're at 10:45. But anybody else have any other questions? Debbie, Jeff.
Yeah, I do.
I thought you might. Debbie, the floor is yours.
Well, so my first question, silly as it may be, American National and then Anaco. What? I don't understand.
So that's ANACO is the abbreviation for American National Insurance Company.
Oh,
Yeah, it's so believe me, because there's Amico with an M, which is American. Well, that's Am is what most people call it, but American Amicable is another carrier. But it took me a while. I didn't realize that for a long time, Anaco was the same as American National.
okay. Yeah, I was going. Okay, lost me there.
That's
Thought it was a subsidiary or something.
believe me. I just wanted to make you understand that is not the first time I've done that. I did that for about 2 years. I'm like, Anaco, it's different than American National. What? I don't understand.
Yeah, who's what's who's. Okay, and then he was talking about this 401k thing, and he just said something about the postal service. So question, because they have to be 50 employees or less. So are we talking like each individual quote unquote post office location would be its own small business?
So two separate things. So separate those concepts. So you have the small business world of the 50 employees or less for any business out there. The federal marketplace then is different and doesn't apply to the 401k stuff.
Okay.
Yeah. So 401k, 50 employees or less at any place. Federal employees are excluded from that because they're part of a larger system that Anaco the government's never going to hand over.
Right.
And
It's distinct.
yeah, exactly. So the federal employee marketplace, that website that he went over and that list of like, we're using the postal service as one of them because that's, probably one of the most familiar that people have about the federal positions. But there's a lot of other places as well that fit within that. And basically all that people are looking for is a door to get in and do a presentation. And Anaco is what you're going to use to be able to do that, because the federal employee marketplace will not allow anybody else to come in there unless they're on that approved insurance carrier list. And there's only a handful, like there's a little bit more than a handful, but there's not tons of them out there. And if you don't offer that product or that insurance carrier, then they won't even let you in the door to have that conversation.
Okay.
So American National being a very competitive carrier that's in the independent market space, because there's other places. Oh my gosh, Jeff, do you know what it's a final expense place? It's captive. Not Lincoln Heritage, which
As far as an agency or a carrier?
Yeah, an agency. It's a carrier, but it's as an agency. Maybe it is Lincoln Heritage.
Yeah, it probably is, because most of them are.
Yeah, there's a couple
Independent.
other places that have that focus on the federal employee marketplace. But all I'm saying is that within the independent channel, there's not too many options for an agent to be able to get into that marketplace and be able to offer products
American National is one of the few ones that an independent agent can offer. So
The other
hope-
thing he said, he kept saying something about a pyramid.
Paramed.
Paramed. What is a paramed?
A paramed is a medical exam that a client will take to get approved for life insurance.
Ah, okay.
So it's short for paramedical. So that's what it's the industry calls it, and agents call it as a paramed.
Okay.
And Debbie, companies are moving away from that in the sense because there is now accelerated underwriting.
Mhm.
So they usually don't come into play unless the person doesn't qualify for accelerated underwriting or exceeds the amount that the person's applying for.
Okay. That's a little foggy still. That's all right.
Oh, you were really quiet there. I didn't hear that.
That's a little foggy still, but that's all right.
Yeah.
Yeah.
As time goes on, it'll get clearer.
Go bug a vet about it. Or Jake.
I already texted Debbie. Debbie and I are gonna be talking in about an hour and a half.
Anything else for you, Debbie?
No, thank you.
You're welcome. Well, with that said, again, next week, Wednesday, we are going to do the agent facing webinar. And I think I'm going to have, we weren't sure exactly which direction we were going to take it, but with the federal employee and the ANACO, I think we're going to spend a decent amount of time on that. So get agents in front of that. That's going to be a great option. I will create a LinkedIn event and invite you all out to that so that you can invite everyone else, because that's a super easy way to do that. But
this may be super stupid, but not all union, like there has to be a union for federal employees, not all unions.
Yep.
Okay.
Yeah, not all unions are a federal employee.
Okay.
Yes.
But for an individual that works with unions, they may be aware of unions to interact with that would be federal.
And also then some unions, depending on how not the union itself, but the companies that union works with could have the 401k that has less than 50 employees.
Okay.
So, well, with that said, ladies and gentlemen, have a wonderful rest of your day. Have a great rest of your week. We will see you on next week, and let's get ready for that agent-facing webinar. Let's get some people to that. This will be a good event. I'll talk to everyone later.
Bye, everybody.
All right,
Hi,
bye-bye.
Debbie. Listen, Debbie, I hope you don't get frostbite.
Hey, don't you make fun of me.
We'll have to check in with her later to make sure she's okay.
Have a good day.
All right, have a good day,
Bye-bye.
everyone. Bye-bye.